Hey everyone, welcome to our webinar. We'll just give folks a minute to jump in and then we'll get started. We got lots to cover today. All right, looks like people have made it through the door or are on their way. So thank you all for joining us today. I just want to introduce myself quickly before we get started. I'm Ashley Carr. I'm our Chief Marketing Officer here at Enumerate. And we're super excited to have a number of our experts here at Enumerate to talk to you about budget season. Before we get started, if you are new to Enumerate, just a quick little about us here. We are a community management software. We cover everything from accounting, payments, operations, resident engagement, and even can do your bookkeeping. So if there's anything that we can do to make community management easier, that is what we're here for. But today, we're really going to focus on budget season. We have some exciting things to share. We have three of our experts with us today. We've got Vishnu Sharma, who's our VP of Financial Services. We have Joey Zimmerer, who's our product owner. He's going to introduce our new SmartBudget tool. And then Nicole Beal, who, if you've attended our webinars before, you've likely met her before as well. She's our solutions architect. So without further ado, because we have lots to cover, I will turn it over to Vishnu to talk about our budgeting best practices. Thanks, Vishnu.
Hey, thanks so much, Ashley. Hey, good afternoon, everyone. Budget season once again. Vishnu Sharma, CPA, Certified Fraud Examiner. I head the financial services division for Enumerate. We handle close to 400 community associations across the U.S., providing bookkeeping and accounting services with a staff of about 45 and covering some 60,000 doors. Been doing this for a couple decades myself. The team goes back into 1995. Our California office has been around since the mid-1990s. So Enumerate, as you know, goes back into the mid-1980s. We've been around, probably one of the oldest in the industry, with some of the most modern tools and technology that's out there. So budgeting best practices. Go ahead, Ashley. Let's get to the first. I'm going to give you 3 slides, but I'm going to talk through each of these slides. You guys can read, obviously, what's on there. But just so that you know, we're going to talk to each of these. It's year end. What do you need to do before you get to the budgeting process, or what do you need to do before you get to year end? Super important that you make sure you have a number of things in place as you get to the budget process, such as make sure that you've posted your adjusting audit entries from the prior year. So whether you do an audit review or compilation, if you got adjusting entries from your CPA for your prior year, make sure they're posted and accurately reflected in your financials. 2 primary reasons. 1, your financials are not accurately stated until those adjusting journal entries are posted. 2, they may impact your financial results for this year. So if you are carrying forward a loss and did not make those adjustments, you may not be reflecting accurately your fund balance. And your fund balance is reflected on your balance sheet. And that's technically, if you take all your assets and you subtract your liabilities, whatever you're left with is your net worth as a community association, as a company. And you need to make sure that you actually accurately understand what that number is. You also want to make sure you have your insurance schedule for pretty much everybody. Your insurance renews once a year. If you're an HOA, depending on the size of the HOA, may be a little bit less impactful dollar-wise. If you're a condominium association, depending on your size, it's going to be a whole lot more impactful. For example, in one of our primary markets, which is down here in Southeast Florida, I'm based in Fort Lauderdale. Our average insurance policy for a condominium high-rise on the water can run anywhere between $500,000 to $2 million a year just for their insurance. So when you have a 5 or 10% variance in that insurance policy, it is a material number. So you want to make sure that you have an accurate insurance schedule, because insurance generally renews only once a year. And if you're a community association, you're going to have multiple policies. Property, windstorm being your most important, depending on the part of the country that you're in. California, like our California office is, you're going to deal with fire, which is a huge policy up there. In certain parts of the Midwest, you're going to deal with flood as being a huge cost and impact. But down here in the Southeast, you're dealing with windstorm property damage. And with windstorm property damage, that could be 70 or 80% of your overall policy cost, flood, a close second. And then all the others, general liability, D&O. But make sure that you have all of your schedules up to date and you're accurately reflecting the true cost of what you have. Because, for example, certain parts of the country, California, they're dealing with 80% increases, depending on where you are in the state of California this year, on policy coverage. Florida, we experienced between 22 and 24. Between those 3 years, we had 300% increases in our insurance, where we had associations that had policies for 700,000 that ballooned to $2.1 million for insurance, and they were having to special assess to cover it because there's no way anybody predicted that it would be that far. The other challenge with you're going to have with insurance, I think, as everybody understands, you're only getting a best guess because you're trying to plan a budget in September or October, and you're planning a renewal that may be anywhere between March to September of next year. So there's no way your insurance agent, who can't even go out to bid on your policy until 4 to 6 weeks before the renewal date, is going to have any idea. He's going to look at industry best trends as of right now, and they're going to give you a number and say, oh, just plan for 5 or 10%, and that's what you're going to budget accordingly. But you're going to take a number from a professional. At least that way you as the board or as management have a number that's been provided to you by a professional that's within that industry, and you're not wild carding a number that you have no background or basis in understanding what that number could be. One more thing that you want to look at is make sure that your reserves, if you have reserve transfers and they're set up to be moved over, whether you're on quarterly maintenance or you're on monthly maintenance, whatever your plan is, make sure you're moving that money over and you're moving it over timely. Because when you sit down to do your budget calculations for 2026 and you have to calculate what your reserve balances are, you want to make sure you're using accurate reserve balances. You're not seeing an overinflated operating cash balance because you haven't moved over $100,000 worth of reserve transfer. So you're thinking you have more money in operating than you actually do, and you're thinking you have less money in reserves than you actually do. So you want to make sure you're factoring those in. The other wild card I'll throw in for a lot of associations we have that are dealing with special assessments right now, if you are going to be short on your special assessment, you want to make sure that you're figuring out or calculating how you're going to address it. For associations that have multi-year special assessments, rather than amending or modifying a special assessment to go ahead and cover an overage that way, you could simply add a certain amount to your budget depending on the length that you have left. So if you have a 5-year special assessment, and you are 1 year in, you're finishing up your projects and you realize you're going to be over budget $100,000 on the total cost, you may factor in a $25,000 number for 4 years into your operating budget rather than having to amend your special assessment and go through that entire process. So just things to keep in mind as you go through this process. Ashley, next. Now, when you're actually building your budget, so there are a number of things that you want to keep in mind as you're actually creating your budget. Because you're all knowledgeable, you know how to prepare a budget. I'm just going to really just make sure I'm covering some highlights that you want to be factoring in. Every association, when you do your budget, should be looking at your budget and starting out with a zero base, meaning that you're going to start off with a blank slate and you're going to justify every number that you put in. And when you look at a budget, there are two categories you can pretty much lump every expense into: known and unknown. And a known budget number would be something in which you actually have a factual basis, such as a contract cost, your cable, your elevator maintenance, your landscaper. Those are going to be known costs because you have a contract. You might have a multi-year contract with a fixed amount of increase, and you're just simply going to go back to each of those contracts, figure out what you're actually paying now, and factor in your increase. I always get the question, budgeting too tight. Generally, my advice to every association is you budget income conservatively and you budget expense liberally. If you over budget income, you are going to have a shortfall, because if you over budget how much you think you're going to get from clubhouse rental or parking decals or such, and that doesn't materialize, you're going to then have a shortfall in your operating budget for the next year, and that's going to financially hurt you and your performance as an association. When it comes to expenses, do not budget so tight that you're not able to factor in unforeseen circumstances. So, simple, easy tool. Your landscape contract renews in May, and you have a 5% cost increase. Whatever your cost is today that you're paying, just simply calculate a 5% increase overall for the entire year. Don't micromanage it necessarily to being May of next year, and that will give you a little buffer in that contract cost. Because if for something happens and you have to let go of that contractor and hire a new contractor, you may or may not be able to get the same rate that you were paying before, and you may have to factor. So be really careful of budgeting too tightly to a specific number. It's a budget, and it's called a budget because it is an educated guess of what that cost is going to be. Other known costs that you're going to have to come across would be payroll. Every association should be building out a payroll schedule if you have payroll. And a payroll schedule is simply name the employee, what department they are, what are you paying them today, and then calculate out an increase that you plan for next year. You do not have to micromanage once again the process and decide that you're going to pay Bob or Susie Q X amount more next year. If you know that and you're all agreeing to it as a board, brilliant. Go forward with it. If you do not know, do not get bogged down in an hour and a half debate over who deserves a 3% or a 4% or a 5% increase. Just put a number in there that will create a pool for you that next year, when it comes time to go ahead and do that, you can have that discussion, because everybody doesn't necessarily come due for an increase or a merit increase on January 1st. Some associations are doing it based upon their annual renewal of when they started. So if that's their anniversary date is May 1st, then that's the date that you're going to do it for. So don't get bogged down in the budget process. A budget for a community association, depending on the size, can be something that's accomplished in an hour or two. I've seen associations go through 3 edits, and people get caught up in the minutia of whether you're going to replace a contractor or not, whether you're going to give somebody a certain raise or not. That's not a conversation for the budget per se. If and when you are able to renegotiate a contract, fine, figure that out. But for right now, base the budget on what you know and what you expect to happen. But don't budget based upon you may look into a new contractor in January of next year and you may sign for something that's going to be lower. Well, that's not what is today. What is today is you're paying X amount today, budget that plus whatever the increase is based on the contract that you have. If you're able to do something next year, bonus, right? But don't budget so tight and so narrowly. Unknown expenses, utilities. You're going to take a historical average. What have I paid the last 12 months? Is there anything? Remember, every municipality runs on an October 1st through September 30th governmental fiscal year. So if you're running October 1st to September 30th, depending on when you're planning your budget, you should be able to go to the electric company, the water company, and say, hey, what is the anticipated increase for the following year? So you can take your actual for the last 12 months, divide it by 12, and then figure out what your increase is. Things like repair and maintenance, that's truly a wild card because you don't know what's going to break in the coming year. So if you don't know what's going to break in the coming year, the best you can do is you can look at what your expenses were this year, figure out maybe it's a one-off. But if you spent $125,000 in repair and maintenance and to budget $100,000 for next year, doesn't seem to make logical sense. You'd have to be able to justify why you would bring that down at all, because if you experience $125,000 in expense this year, you'd expect that you're paying the same amount, especially if your building is a 20, 30, 40-year-old building. Any number of the buildings up along the coastline right now, if you're in the state of Florida or some of these other states that have coastal properties, you're dealing with buildings that are significantly older. If you're a younger property, then it's going to be less of an issue. But if you're an older property, you're having to deal with these things. New GL accounts. I get the question all the time about, can I break out new GL accounts? Can I, like, I inherited the budget from the last board or the last management company, and this is the way they did it, but I'd like greater clarity. Your budget is a tracking tool. It's meant to be a management tool that allows you to track the expenses that you're paying and be able to measure the performance of the association. If for you that means you need a couple more accounts, break out some accounts. I have associations with 5 repair and maintenance accounts. I have associations with 20 repair and maintenance accounts. The only caution I would give you is there again, my favorite term of this entire speech today is going to be micromanage. Do not micromanage the process. If you're a $2 million budget, do not have a $1,000 line item necessarily, right? Because if you produce an income statement that is 50 lines long of expenses, you're going to lose your audience, which is your board of directors and or others that are going to need to be able to read it. And whether I'm $100 or $200 over because I've broken out something to such a minutia that I have $1,000 line item on a $2 million budget, I'm losing the forest for the trees. I need to be looking at the bigger, impactful things because community association budgets are generally categorized in 4 or 5 major. Payroll is always going to be big. Utility is always going to be big. Insurance is going to be big. 60% of your expenses are going to be lumped into 3 or 4 categories. And of those 3 or 4 categories, contracts are known, payroll is known, right? Insurance is a wild card. You don't know what it's going to be until when it gets to that point. And there's nothing you can do or very little you can do to control your insurance expense outside of like repairing your building, bringing your roof up to date, whatever those costs would be. And those are major capital projects that you're not going to be able to effectuate, in a budget cycle, much less in the 6 weeks it's going to take you to plan your budget. Contingency. Everybody wants to know, should or should I not have a contingency line? There are 2 ways of addressing contingency. Some associations have a general repair and maintenance line. They may have on an HOA, general ground repairs, things like that. You can use generalized categories. Others have a specific line item called contingency. If you're going to put in a general line called contingency, understand that the purpose of a contingency line in a budget is to allocate a sum of money for unknown expenses that are going to arise in the coming year. But at no point should you ever book an expense to contingency. If you have a plumbing repair and your plumbing budget is $5,000 and you had to take out the 12-inch main pipe under the building and it costs $25,000 to replace that piping, that's going to be budgeted against plumbing for $25,000 and you're going to be $20,000 over budget. That's fine. It's a budget. What is more important, you don't want to take $5,000, which I see people try to game the system, and you put $5,000 of that cost against plumbing, so you're in line with your budget, and you take the other $20,000 and you bury it in contingency. You've done yourself and the board and the community a disservice if you do something like that, because everybody needs to know that you had a pipe break and that cost $25,000 to replace. And also, when you sit down to do the budget in the new year, you need to know, by the way, do we need to plan for any other major pipe breaks? We're a 40-year-old building. We're a 30-year-old building. Is this something that we're going to need to maybe up this budget? Do we need to call in and have a plumbing inspection for all the major pipes so that we don't get caught off guard? If you hide that in contingency, you don't know what the nature of the expense is. It causes suspicion among the board and owners because they can't have transparency in the financials, right? So you want to make sure that nothing's booked to contingency and it's booked to the actual line item where the cost is. Adding new GL accounts. If you have a major repair that you have to deal with, book it there. Create a new line item. We have associations that have insurance claims. So an association called me last week. They have a flood on the 14th floor. It created damage. They want to be able to track that expense separately. Great. Under repair and maintenance, create a new budget line, water damage leak, or call it something as specific as you want. Water leak, 14th floor. Whatever it is that's going to help you as management and or the board easily be able to identify what it is and put all your expenses into that line. It's a one-time expense, but it may cost you a material amount of money, 10, 20, 30,000 or more to repair. Also, by doing that, it makes it easier if you're going to file an insurance claim. You now have all the costs related to that repair in one spot. when you're doing the budget for the new year, you're going to know that, yes, I'm over in repair and maintenance by 50 grand, but 40,000 of that 50 was related to that one-time water leak. I'm not necessarily going to be budgeting for that for the next year, right? Capital projects. Should capital projects be included in the operating budget? Generally, no. Unless you want to be able to cover it. Generally, operating budgets are operating budgets and operating expenses. Some associations will plan for nominal capital projects and put it in. And if that's the way the association and the board is comfortable in doing it, please go right ahead. Because the only two ways you're collecting money as a community association is your operating budget or a special assessment. And to some associations, special assessment are the two dirtiest words in the universe, and they never ever want to hear them. So if it makes it easier for you, just put it into the operating budget, and the owners are making only one payment and it's covered as part of that, and you'll take it out of the budget the next year when you have to do it, fine. Go ahead. Know your community, know your board, and how you want to present that information to them. Finally, in budgeting, the last tip I'll give you is prior year loss. If you're losing or you're projected to be over budget $100,000, $150,000, how did you pay for it? Did you use your surplus cash that you've spent 10 years building up and you now have like no cash in the operating bank account? You need to replenish that cash. And if you're not going to replenish it by a one-time special assessment, add it to the operating budget next year. But if you have an operating loss should be factored in to the new year budget, unless you look at your cash position and you're saying that, hey, my operating cash is running at 2 times my monthly budget. Unless you're in that type of a cash position, you need to reimburse your operating for any of that loss that you're incurring in the current year, and just add it as an operating loss or an operating shortfall and as an expense line under administrative. Okay, Ashley, next slide. Impact of recent regulations. Depending on what state you live in, there are some huge impacts to regulation that you just need to make sure that you guys are aware of. If you're in the great state of Florida, you're all very well aware of structural integrity reserve studies and the need to mandatorily fund structural integrity reserves this year. Or if you were grandfathered in, you passed your budget before December 31st, 2024, you're allowed to go ahead and waive it one more time. Great if you did that, but that means in 2026, you can't waive it anymore. You need to make sure that you're going to go ahead and you're funding that as needed. Be very careful also in the state of Florida. If you think you're going to be able to qualify for the exemption because of the milestone exemption that they get, talk to legal counsel, make sure that you guys are in compliance, because that rule specifically says you must have had a milestone study done within 2 years, and the work that you're doing has to be related to the work called out, the repairs needed in that milestone study, and you have to be actively doing those repairs. Because what the legislature's point was in saying is, look, if you're doing a $5 million special assessment because you got called out for concrete restoration work as part of your milestone study, and you're now going to go in and you're going to do that work, hey, we'll give you a break and you don't have to fund reserves for 2 years while you're doing that. But then you've got to get a new milestone, you've got to get a new reserve study once it's done, and then you have to start funding at that point once you finish it. But got a question from a client 2 weeks ago, and they thought they were qualified for that. And it's like, guys, did you do a milestone study? I'm sure we must have. Well, you're 18 years old. You didn't even qualify for a milestone because you have to be more than 25 years old, right? So make sure that you are even qualified, and the best person in the universe to give you that answer is legal counsel. Not your CPA, not your auditor, not your accountant or your management company. Get your legal counsel to make sure that you are actually, in compliance with whatever that law is and you understand it. There's some huge numbers coming down for mandatory funding of SIRS, and it's important to understand what the calculation is that has to be done. And if you're doing work, had a call with an association today, they're in the process of doing a $2.4 million roof replacement. Well, their roof is end of life, and the $360,000 that they have to fund in reserves, just their structural integrity full funding of reserves for next year of $369,000 or so, it's because their roof is end of life. Well, if they're going to be passing a special assessment to replace the roof, they can go ahead and reset that to zero, to full life, which means they now can reduce the amount they're going to have to fund for next year, right? So there again, that's where you get with your accountant and your management company, make sure they're calculating or factoring that in. And that is going to be very significantly materially impactful for them. Insurance changes we've seen in the state of Florida, for example. California, I mentioned. North Carolina is dealing with some issues right now with insurance and massive increases. State of Florida, we're coming on the other side of that. We had some changes in the insurance laws that we're now seeing come through, and it's actually bringing down some insurance costs, plus buildings of having things redone. And as they've redone their buildings, they've been able to go ahead and see reductions in their insurance. The last thing I'll leave you before I wrap this up is website requirements. Be aware if you're an HOA and a condo in the state of Florida, there are new laws that are in effect. HOAs have to go ahead and have a website if you're 100 units or better. Condos have always, if you're 150 units or better, for a number of years now, supposed to have a website. January 1st of next year, condos 25 units or greater must have a website. There's a lot to go in. You need to get with legal counsel to make sure you understand what has to be posted onto that website, who must be able to have access, and how it's set up. So make sure that you get with the players that be and get that set up for you. Ashley, I'm done, and I'm happy to turn it over to Joey and you.
Awesome. Thank you so much, Vishnu. A wealth of knowledge as always. With so many different pointers and things to remember. Here at Enumerate, we're really excited to introduce our new Smart Budget tool, which will hopefully take some of that load off of you. So I'm going to give you just a few, 2 slides, I promise, and then I'm going to turn it over to Joey, and he's going to show you more about how it works, which I'm sure everyone's super excited about. Here we are introducing SmartBudget. As I mentioned, Joey's going to show you each of the different features in the tool, but a couple of things to call out and be on the lookout for as you're watching his demo is that it's a really great tool for generating that first budget draft. And if any of you are familiar with tools like ChatGPT and other LLMs, you're able to make adjustments to it in a conversational way, like increase this by 5%. And some of these different features really make it so that you can be more accurate. You don't have to worry about accidentally typing something wrong, for example. There's dynamic assessment calculations included, and what you'll see is a lot of the detail in terms of how the tool is coming up with the answer, and the first draft is all there right for you to be able to see. So no questions in terms of what it's doing and how it got to the answer. Also providing some initial guardrails and prompts if you're new to using it, can help you understand what it's doing and how you can use it. So we had the pleasure of test running it ourselves, so Vishnu can speak to it if anyone has questions at the end, but huge time savings, getting that budget draft in 10 minutes versus an hour or two. And that's, someone doing it for many communities, that can be a huge time savings. Faster workflows, you get more control, and overall hoping to make your lives easier, particularly in this really busy time of year. So without further ado, I'm going to turn it over to Joey, and he's going to show you Smart Budget live within Central.
Awesome. Yeah, thanks for the intro there, Ashley. Let me go ahead and share my screen. We are super excited about this tool. This is something that we worked with Vishnu and team pretty closely on, and we heard from you guys at our CAB events. And really, we've just been hearing about the need for a way to budget smarter. And so over the past couple months here, we actually put something together, which is our Smart Budget, our AI budget tool. So let's go ahead and just navigate to it. What we're going to do is select a community here. And then we're actually going to go to our new year setup here. So the thought is that as you're setting up that new year, you're also creating your budget alongside it. So let's go ahead and go to our accounting year dashboard. And this is under the related links on your communities. And then from here, we'll go to the setup new year. And so this is just what we're doing, every year for every community. We're setting up this new year here. And as a part of that process, you'll see here once we get to this fourth step, it's actually entering in that budget information. And so it made sense for us to have the budget tool live here. So as you can see on the left side here, we have our smart budget. This is our AI tool. It has the ability to create budgets, adjust amounts. So let's just go ahead and start getting our budget created. So I'm going to prompt it there to create my new year budget. And what it's actually going to do before it starts generating that budget is it's going to give me sort of the criteria for the prompt. It's going to tell me a few different things here. So we're able to see the number of accounts that it's going to create a budget for. It's going to show the current combined budget for these accounts, the historical data used. So by default, we have this set to 3 years. It's able to go from anywhere to 1 to 5 years of historical data. And then it's just going to let me know here that it's going to overwrite any information I put in over here. So as always, we can totally just manually create our budget as well. There's nothing stopping us from doing that. We just now have this addition of the AI here on the left side. So let's go ahead and start the generation here, and I can tell you a little bit more about the tool while it's generating. As Ashley mentioned, this is, we're promoting this as kind of a first draft, your first initial set of numbers. So, obviously you still need to review the numbers that the AI is generating. You don't want to just blindly trust the numbers. We are using historical data and comparing that to what we've budgeted for previous years. So if there's been discrepancies, it will be able to tell and, create that calculation accordingly. But it is worth noting that, let the AI generate the numbers and then go back and review them. And as you can see on the left side here, it's going to let us know how many accounts are being generated. So right now we're at 97 of 127, and this will update. And then it's also letting us know up here, hey, you can actually leave this page and come back, and it's going to notify you when that budget is complete. So if it's taking too long or you have something else to do, feel free to leave this page, and then it will notify you when to come back. As you can see, it's pretty quick here. So I think Vishnu mentioned previously it might take 45 minutes to an hour to generate a single budget for a community. And as you can see here, that generated in a few minutes there, 2 minutes. So it is pretty quick. Let's let this finish up here. What you will see, so if you look over to the right side here, we have the numbers it has generated. And then alongside that, the AI is also going to provide a reasoning for the numbers it generated, right? So it's not just going to generate numbers and then you're left to review and kind of figure it out yourself. It's actually going to provide you that reasoning. And like in this case, it's even kind of providing the exact calculation it used. So the tool is pretty smart. It's intuitive. We're able to export this as well. So let's just take a look at that export. In this export here, it's pretty basic. It's just going to show us our accounts. Give it a second to pull up here. All right, so as you can see here, it's going to pull up those accounts. It's going to show us our budget for this year. Ignore the 2022. This is just a little bit outdated here. And then it's going to show us the previous year's budget as well. And then if you look over here to the right side, it's going to print that reasoning here as well. So when you're reviewing the budget, you can print it to Excel and you're still going to have that reasoning alongside each number. And then we can come back here, we can make adjustments to the budget as well with the AI tool. So we could do it manually, or like, for example, we could say something like this. So we're able to, for example, adjust my miscellaneous owner income by 10%. It's going to think here for a second. And then if you look over here to the right, you'll notice this number will change once it's done. And it's also going to update that reasoning alongside it as well. So it'll stay up to date with the reasoning. It'll say, for example, we can see this change to 8910 here. And then alongside that, the reasoning, user requested a 10% increase to the miscellaneous owner income. So it does provide that context always. Like I mentioned earlier too, we're also able to just close out the AI tool. So if we don't want to use the AI budget, we don't have to. And we can always find it back here in the bottom right. and that'll pull it back up here. One of the other things that the tool can do that's pretty cool is it's able to analyze data. So it has access to all of the previous year's budgeted data. So I can ask it something like, analyze my assessment income over the last 3 years, let's say. And so what this is going to do here is it's just going to take a look at the past 3 years. It'll compare my actuals versus my budgeted amount, and it'll kind of give me like a summary report of those past 3 years. So the tool is not only able to just generate numbers and generate the budget, it's also able to kind of help you critically think about your budget over previous years. So like, for example, here you'll see as we scroll up, it's going to show me my 2020 budget versus actual versus 2021 versus 2022, which in this case was the last 3 years for this community. The last thing I'll show you here real quick, that the tool can do, it can even call out like important accounts. So for example, so I can have it generate a response here based on, the important accounts to call out to the board specifically. So this could be something that's changed drastically, or maybe there's a huge variance between this year and the last year, or maybe it's just an important expense account that changed that we need to call out. So it's able to help us critically think here. And in this case, it'll likely provide us with some talking points, even if we're not exactly sure why that amount is what it is, it'll provide that reasoning as well. So we're really excited about this tool. I mean, it transforms the way we do budgets. And it's definitely intuitive in the way that it's thinking, where it's not just worrying about, what the numbers are, but it's also able to tell you kind of why and analyze that as well. So as you can see here, one of them, like certain accounts were reduced to 0 or near 0. There's some talking points, some suggested actions here. It can kind of go through all of these scenarios here, and it does have access to that data. So, you can really prompt it with any questions you have about your budgets, and it should be able to answer those. I know we're running a little short on time here, so if we want to open for some questions, answer a few questions real quick, and then.
Yes, I can. We've got a few coming in. And again, if we don't get to everyone's question live, we can answer them afterwards, following up, or we'll have time at the end for a few more as well after Nicole shows the rest of the budget piece. But first, are there permission restrictions, or is it available to all users?
Yeah, so it just depends on how the permissions are set up. It should be available to all users in Central, but there may be a case where the permissions aren't set up correctly, but we can adjust those. So
great. Thanks, Joey. So case by case, if you're having trouble, just reach out and let us know. A question, is the tool available right now? Yes, it is live in Central. I can answer that question. So go check it out within your own account and you can start to play around with it. Another one for you here, Joey. What if you already set up your new year? Can you still use it?
yeah, so if you already set up your new year, right now you'd actually have to go in for that next year and play around with it. There is some thought to put this on that GL page as well, so we'll always have access to it, but right now it does live in the new year setup.
Great. Let's see. Oh, they're coming in now. Can you remind people how to access it again, Joey?
Yeah. So if we're just starting from the homepage of Central here, we are going inside of one of our communities. So I'm just selecting my community here. And then if you scroll down under related links, there is this accounting year dashboard. And then under the setup new year or continue new year setup, just depending on if you've already started it, it's under here. So at the budgeting portion of the new year setup is where we will see the SmartBudget tool.
Great, thanks, Joey. And then a question as well, if it's, which I can answer, is the budget tool available standalone, or does it need to be part of the Enumerate system? It does, it is only available to our Enumerate Central customers because it is pulling from the historical data. So if you're interested in that, we're happy to connect offline as well. There are more questions. I'm going to turn it to Nicole and I'll let Joey take a look and he'll either answer them in the chat or at the end we'll do them live as well. So thank you. Keep them coming. All right, over to you, Nicole.
All right, thank you. I have just shared my screen now. Everybody can see that, right? Okay, perfect. So before you get into the budget, right, you want to make sure that you have the information that you need to properly prepare the budget. So I'm going to go over some of the information I'm going to go over is a little bit duplicative to what Joey went over. But before you start your budget, you want to take a look at your reports, take a look at the history of the current year, previous years, and what's going on in there. So from your standard reports within Enumerate Central, you would use the yearly spreadsheet report. The yearly spreadsheet report is going to break down your income and your expenses for the current year. And then based on what you choose here, either calculate the monthly average for the months that haven't yet occurred, or use the budgeted amount for those months. And that's going to help you kind of extrapolate out like where you're going to end up this year so that you can better plan for next year. So this is just making sure before you start the budgeting process, you have the data that you need to compare to make sure that when you do the budget, whether it's using the smart budgeting tool or if you're doing it manually yourself, you've got that information. Now, as you can see from my screen, I have a multitude of tabs open. So if you get through the New Year setup wizard and realize that you forgot to run the reports, it's fine. You can open up a new tab, you can run the reports after, you can flip back and forth between them, you can export to Excel or PDF or whatever works best for you. But this is the report that you're gonna wanna use when you're starting out and preparing to do your budget. So from here now, I'm going to go to that accounting year setup. So just like Joey showed you from the community profile page, you're going to go down to related links. You're going to go to the accounting year dashboard. From the accounting year dashboard, you're going to set up the new year. Now you have an option up here for multiple accounting year setup. What that's going to do is it's going to bypass the wizard entirely, right? So it's not going to step you through the budget. It's not going to step you through updating the owner charges. It's going to create the new year for whichever communities you've selected to create the new year for. It's going to copy the current budget for this year into the budget for next year. It's going to copy the charge codes for all of the homeowners. So it's going to say whatever you're paying this year, you're gonna pay that next year. Don't worry, I'm going to go over how to modify that after the fact. So if your goal is to just set up the new year, you're not quite ready to get started on the budgeting process, you can use this this express setup. If you choose to go through the wizard, then you would, get started with the wizard. It's going to, default to the next year. It's going to give you the start date of the fiscal year. So if you're already on a non-calendar fiscal year, it's going to start at whatever the first accounting period would be of that non-calendar fiscal year. And your new year will be a date range or a year range like this. Your periods, which generally speaking are monthly. So it's going to automatically fill in, how you were set up previously. You select your year-end expense account. You go ahead and hit next. Yes, that is the year-end expense account. It's going to verify the months, right? The accounting periods for the next year. So verify like, yep, you're definitely starting in January or in April or in July or whenever it is that your fiscal year begins. And then from there, that's where it's going to take you to that budgeting tool, that smart budgeting tool that Joey went over. And you would use that smart budgeting tool to build your budget. If you aren't ready for the technology, right? If you're already prepared, you already did your budget before we released this tool, and you want to use the export and import functions, you want to use the copy budget functions, you can do that. You can actually close this out. You can, change, maybe I want to see what it's going to do anyway, and reopen it again. So you will have that tool available to you. It's going to automatically populate in here your budget amounts from the current year, so this year's budget. But when I use that copy budget function, I can increase or decrease by percentage. And again, I'll show you how to get to this from the regular GL area as well. Once you've got your budget where you want to be, you would just hit next, and that's going to take you to the next step of the accounting year, which is updating the homeowner charges for whatever the new amount is going to be for next year. So if it's the same, you don't have to worry. If it's different, you can edit it here. If you don't know, that's fine. You can just hit next, and again, make that change later. And then it's going to ask you, good job. Do you want a reminder to do this next year? Do you want a reminder sooner than September? Or is this time of year good? And then, finish the process. And that's going to finish the new year setup, so you'll have next year set up. What's nice about this process, other than the fact that it walks you through everything you need to do to set up for the next year, it also prevents you from accidentally fat fingering transactions into the future. So if I'm entering in a date and I actually hit 2027 or 2028 instead of 2025, that year doesn't yet exist in the central program. The program won't let me post that transaction. So it's a good guardrail too against accidental mistakes. Now, as Joey mentioned, you can get back to that process if you started it. So from the accounting year dashboard, if you use the smart budgeting tool, you finessed the budget the way you want it, you exported it, you took it to the board, they had some changes, you want to go back and change it, then when you go into that new year setup, it'll say continue new year setup. Clicking that will take you right back to that budgeting tool. It remembers the questions that you asked. It has the explanations of everything you did prior. So you can just go back and make those adjustments, those final adjustments, and then produce this report again for the board to approve at their board meeting. Once they do the approval, then you can go to the next step to update the owner charges. Should you choose to do the budget outside of that process, like say you use the multiple community setup, right? That just kind of bypasses that wizard. You just want to create the new year because you're planning on doing the budgets next week. Then that budgeting you would do here in your general ledger budgets area. So that's going to give you access to the budget information. You can copy the budget just like we were able to do in the wizard. So if I want to copy the budget from this year to next year and increase or decrease by percentage, I can still do that from here. If I want to do an import and an export the budget to Excel, because I've already got all my formulas built in there, and then import it back in, you can do that from here. If I wanted to just go ahead and enter the budget figures directly, I can do that here again, through that enter budget area. So you can still use that multiple community new year setup and access the budget tools that you've always had from the general ledger budget area. Once your budget has been completed, then in the central standard reports, you're going to have your budget report. And so this is where you would produce the report, again, to PDF, Excel, Word, however you wanted to produce that report for the board of directors for approval, for the homeowners to send out to the homeowners. So the budget report from your standard reports is where you're going to access that. One of the things I want to point out in the reports, this one and all of the reports, is the save as attachment function, because this will actually allow you to essentially take this report and push it to your Engage website, your Engage portal. So if I just save this as an export, right, just attach it, it's going to attach it to the attachment gallery on the community profile page. And it's going to show up in the board documents area in the software. So if I tagged it with budgets, it's going to show up in the budgets folder in the Engage platform. So you don't necessarily have to, print it and email it, or, save it as a PDF and email it. You can just push it to the board area directly through the central program. If I turn on this publish to owner portal, then that is going to publish it to the resources area, again, within your Engage website, within your Engage portal. It'll be in the resources for all of the homeowners to see in their documents area. If you still need to mail, still need to email it out, go ahead and do that, but at least it'll be there, a place for the homeowners to find it. I know you sent me the budget. I don't know what I did with it. Can you resend it? I could, or you could just get it from your portal, right? So we make it really convenient for you to get that information out there, both for the board of directors and for the homeowners. Okay. So going back to the setup. So your budget's done, your budget's approved. You know how much the homeowners are going to be paying now through the system. So you're going to access that again through the related links, right? You've got your accounting, your dashboard here. You've got your codes right here. So what you need to do is you need to update the assessment and any other recurring charge codes that you have for the homeowners for the next year amount. So this is, I have one of my recurring codes in edit mode. When you get in there, you're going to see this replicate changes. What that's going to do is it's going to copy the amounts as they were in 2025 to 2026. So if nothing's changed, the homeowner still pay the same amount. We might have, moved things around in the budget, but managed to not increase the fees. Then you just hit replicate changes. That's going to copy it over for you. If the things have changed though, then you would change your fiscal year here to 2026. I don't want to accidentally update this year and start charging the wrong amount in October. You're going to change your fiscal year to 2026. You're going to edit the different categories, and you're going to update the amounts that'll get charged to the homeowners in 2026. And then of course you're going to save your changes, and then you'll be ready to go for next year. When it comes time to, in your invoices and statements, to generate coupons or invoices for the homeowners, then on the coupon page where you create that coupon file, or you send out, you push out through the South Data integration, the coupon order, you've got the fiscal year drop down right here. So you want to make sure that you change it to the next year, so that when you order those coupons, it actually reflects the next year amount and not this year amount. Double, triple, quadruple check that. It's a costly mistake to order coupons for the wrong amount and then have to reorder them again for the correct amount. So just a simple drop down on the fiscal year. Make sure it's got the right year. It'll produce the right amounts on your coupon export. And then if you generate statements out of the system, and you'll probably do those in December, right? Get those statements out. It'll have the next year amount set up already. Right here, attachment PDF, that'll allow you to attach an outside document to the statement, so that when it goes out to the homeowners, they'll receive their statement or invoice, and they'll also receive that document. So again, if you have to email, if you have to mail the budget out to the homeowners, rather than doing that as a separate mailing, you can attach that with the statements that are going to go out to the homeowners and just include that as part of that package. So they'll get the statement and they'll get that budget document as well. And I'm out of tabs, which means I've gone over everything that I felt that you should need. Do we have any questions?
Thanks, Nicole. Yes, we do have a few questions. I'm going to throw up a poll as well. I know a few folks were asking about having someone reach out to help them as well. So I'm going to put up the poll, and then I'll also, so feel free to answer it, and then I'll ask some of the questions that we're getting in as well. So Nicole, one question for you. was the budget that you showed was showed in a monthly view. And in their case, they actually typically do a yearly view with yearly historicals, actuals. Is there a way to make Central do it in that format, or is that something they need to do in Excel?
Yeah, that's something they need to do in Excel. The export from Central is going to give the monthly view. You would just export it to Excel and delete the month. So if you wanted to show it quarterly, though the expenses might be monthly, the income could be quarterly. So if you want to show it as quarterly, you do that in Excel.
Great, thank you. And then let's see, a few more coming in here. There was a question around the New Year's setup. Is that connected to the GL budget ledger, or are those separate?
Yeah, it's all connected. So the budget fields are based off of the income and expense accounts in your chart of accounts. So when you do that, it's gonna give you those income and expense accounts so that you have the budgeting information. So it's all tied together. Same with the system, right? You make an AR entry, it automatically updates the GL.
Great. Let's see. I know there's some other questions coming in here. There was a few from on the SmartBudget as well, which Joey answered. There was one, Joey, I think you're still there answering questions that I thought might be relevant to others as well, which was around their operating cycle has high seasonal variance. How is the AI tool looking at that? Essentially, you know, how is it projecting going forward? I know there's a lot of different use cases that everyone may have around how they do budgeting, and I thought maybe you could speak to some of the different pieces that the ways that you could modify or ask the budget tool different questions to get it to do what you'd like.
Yeah, so by default, it just looks at like a yearly basis. But you are able to prompt it to adjust that based on the seasonality. So you can prompt it to say, you know, take into account that seasonality or that month versus month actuals versus what was budgeted. So you can prompt it to do that, but by default, it goes based on the year.
Got it. Great. Thanks, Joey. Lots of other ideas as well as to new things that people are wondering if we could do with the budget, with SmartBudget. So we'll definitely take that feedback back as well. Let's see. So what is the step on the year-end suspense when just starting the budget? There was something I missed what we put in the drop down.
Oh yeah, that was part of, that was like the first step of the New Year setup process. It just asks you to confirm your year-end expense account, which is generally the last GL account in your chart of accounts. So it's 9999999. Depends on how many digits you've got going there. But it just verifies that to make sure that you're using the same one year over year and haven't created a new one.
Got it. And then here's a question. Is the SmartBudget only for those, it's a Joey question, those inputting in the 2026 budget, or can it be used as a template for managers without going through and finishing the full setup?
Yeah, I mean, as of right now, it is for setting up that New Year's budget. But you know, this is really just step one of the budgeting tool. There's a ton we can do with it, and you know, by next year's budgeting season, we'll have a lot more functionality to it. But yeah, as of right now, it's just for the new year.
And remember, I mean, we do have the other budgeting tools as well. So if you go and you use the SmartBudget tool and you've got this budget and you go to present it to the board of directors and the treasurer is like, I made a budget last night and we're going to use my budget. You can, unfortunately, you can import their budget over the one that the SmartBudgeting tool created.
Awesome. Well, I know we're just about at the hour and you guys are all busy. It's budget season. So thank you to all of our presenters. As I mentioned, we will send out the recording at the via email today or tomorrow. So you'll have access to go back and watch this as well. We have a couple of events coming up in person. If you happen to be in the California area or in New England, we'll be out in your area soon. And then if you have any questions that we didn't get to, we'll either follow up with you one-on-one or you can reach us at hello@goenumerate.com and we will be able to respond to you there as well. So thank you so much for joining us. We really appreciate your time, and excited to share this new SmartBudget with you. Bye, everyone.
Thank you.